Good day, ladies and gentlemen, and welcome to the Q1 FY23 earnings conference call of Indoco Remedies, hosted by JM Financial Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that the conference is being recorded. I now hand the conference over to Ms. Cinderella Carvalho from JM Financial. Thank you, and over to you, ma'am.
Thanks, Michelle. Good afternoon, everyone. I, Cinderella Carvalho, on behalf of JM Financial, welcome you all on the Q1 FY23 earnings Concall of Indoco Remedies. At the outset, I thank the management of Indoco Remedies for giving us this opportunity to host the call. And I congratulate the management on delivering sustainable number trend. Today, from the management team, we have with us Ms. Aditi Panandikar, Managing Director, Mr. Sandeep Bambolkar, Joint Managing Director, Mr. Pramod Ghorpade, Chief Financial Officer, Mr. Vilas Nagre, Corporate Affairs and M&A. I now hand over the call to the management for their opening remarks. Over to you, Ms. Aditi.
Thank you, Cinderella, and thank you everyone for joining us this afternoon. Let me start with a couple of positives we have happening at Indoco right now. I'm very happy to share that last week we have gone live with SAP S/4HANA, all modules at Indoco. I'm very confident that SAP implemented at Indoco is going to result into higher levels of efficiency as well as help us in all our strategic pursuits. Secondly, as mentioned in the last call, in a few weeks from today, specifically on 23rd of August, 2022, Indoco will complete 75 years since it was registered. It's a matter of great pride for all of us at Indoco, and Indocoites across all locations, all functions are engaged into various activities as well as improving sales to ensure that this is indeed a great Platinum Jubilee year for the company. Let me now come to performance of this quarter. As you all will recall, the organization had performed very well in the last financial year, partly because of certain tailwinds of COVID products, as well as excellent growth in international business. I'm happy to share that while for India business, the tailwinds of respiratory and anti-infective basket of products is not there, we have still managed to give a steady performance in business. And in fact, without impact of those products, India business would have grown by over 14%. Also happy to share that international business has done a great growth for the company. So we closed the first quarter of financial year 2022-23 with a consolidated sale of 395 crore, of which domestic contributed to 200 crore. International business contributed to 177.3 crore, which is 45% of the top line. In domestic market, respiratory and anti-infective, as I mentioned earlier, had tailwinds of COVID last year, and therefore they dented our performance. We are confident though that both these segments will recover and start performing well in the coming quarters. On the international front, the US business has grown by 40.7%. Sales in the Europe region are flat in view of some of the challenges we have servicing orders to Europe, and as we take the business to other locations so that there is higher capacity to service contract manufacturing, this should get corrected. Going forward, we anticipate an easing down in the stress that has been put on the COGS or cost of goods, and a normalization of other increases in freights, etc., which have put a constraint on our Ebitda earnings. I'm confident as the half year concludes and for the year forward, we shall show an improvement in our Ebitda margins, which took a hit this quarter. For the first quarter, we have recorded an EBITDA of 71.3 crores, which is at 18% of income, and a profit after tax of 38.5 crores, which is 9.7% of sales. That is all from me. I will now hand over to Mr. Sandeep to take you through financial highlights.
Thank you. Thank you, Aditi. Once again, good afternoon, all the participants. Hope you and your family members are all safe and healthy. Let me first begin with the business highlights. Net revenues of the company grew by 3.6% at rupees 394.9 crores. EBITDA to net sales for the quarter is at 18.1%. PAT to net sales for the quarter is at 9.7% at rupees 38.5 crores. And earnings per share for the quarter is rupees 4.17. Now on the Indian pharma industry, IPM valued at rupees 45,078 crores has registered a growth of 2.1% during the first quarter. This IPM growth of 2.1% comprises of volume growth at minus 1.8%, price growth at 5.1%, along with new product growth minus 1.2%. IPM value trend line indicates a gradual normalization of the sales trend. Anti-infectives, vitamins, minerals and nutrients and respiratory are degrowing when compared to the slow-growing IPM. Derma and gynecology therapies growing at 24.1% and 25.3% respectively are driving the growth of the IPM. Indoco ranks 27th on cumulative basis, that is July 21 to June 22, with market share of 0.67% and reflects growth of 13.5%. Considering first quarter performance, Indoco ranks 29th with market share of 0.62% and reflects a growth of minus 3.4% during the first quarter. Domestic formulation business. Revenues from domestic formulation business for the quarter degrew by 7% at rupees 200 crores as against rupees 215.1 crores. Major therapeutic segments like dermatology, ophthalmology, and gastrointestinal performed well during the quarter. Now on to the international formulation front. Revenues from international business registered a growth of 16.3% at rupees 177.3 crore as against rupees 152.4 crore. Revenues from regulated business for the quarter grew by 15.1% at rupees 147.7 crore against rupees 128.3 crore. Revenues from US business for the quarter grew by 40.7% at rupees 64.9 crore against rupees 46.2 crore. Revenues from Europe for the quarter were at rupees 77.7 crores against 79.2 crore. South Africa, Australia, New Zealand was at 5 crore against 2.9 crore. And emerging markets showed a growth of 22.7% at rupees 29.6 crore against rupees 24.1 crore. The API business of the company grew by 22% at rupees 13.3 crore against rupees 10.9 crore. Revenue from CRO and analytical services for the quarter was at 4.2 crore against rupees 2.8 crore. This is all about the business highlights for the quarter, and I now request the participants for their questions. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. first question is from the line of Aditya Khemka from InCred Asset Management. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sandeep sir, could you quantify the profit share that we received in 4Q in our export formulations? And what is that number in 1Q FY23, please?
Aditya, it's between 6.5 and 7 crores.
This is for 1Q FY23, Vilas sir?
Yes.
And what was the same number in 4Q?
Fourth quarter last year, I think it was around 7. So we are roughly doing the same number, Aditya.
Yeah. So the question here, Aditi ma'am, is that last quarter we obviously had some supply challenges in Brinzo, the second half of last year. My understanding was after our Concall last quarter was that the issues were now behind us and we were supplying. So why isn't the profit share number moving up?
Yeah, so as we had explained earlier, but let me do that again. When we supply brinzolamide, we supply it to Teva, which is booked as our sales. And the profit share comes to us after Teva further sells it in the market, closes their quarter and a quarter after that. So it's a long kind of a gestation thing. So while we have supplied brinzolamide to Teva in the last quarter, we are now in the process of regaining market share, which itself is going to be a Herculean task, but they will do it. And you will see impact of that in the future quarter.
Understood. Could I also get a sense of the launch of Combigan in the US market?
Yes, Aditya. We have finished answering the CRL and all documents have been logged in with the FDA. We were given to understand earlier that by September first week, we would get approval, but that has gone ahead by almost a month and 10 days. So it should be around 15th of October that we'll get the approval. The goods have already been shipped and they are with the partner's warehouse.
All right. So basically the launch now will be in somewhere mid-October. That is your target action date now?
That's right, yeah.
Okay. And also could you, so I'm just worried about the sequential decline that we have seen in the regulated market revenues. So I'm wondering, Europe, obviously our commentary has been very exciting there, with Baddi getting commercialized. There also we are seeing no sequential uptake. And when I say sequential, I'm comparing the fourth quarter of last year to the first quarter of this year. And same with the US, despite at least supplying brinzolamide, even if no profit share, the number seems to be really weak compared to the fourth quarter of last year. So what is driving that, sir?
No, actually, there have been certain factors. If you recall, during the commentary of our Q4 of last year, we had clearly said that we need time till September for things to settle down and then, show a real good growth. Because we have been passing through turbulent times for availability of material, for COGS, for so many other factors, availability of containers, availability of key starting materials, APIs. But I think in spite of all that, the performance has been quite commendable, number one. Number two, coming to Europe's flat trajectory, there are a number of European products which are being site transferred to Baddi because we want to make Goa free for US business. So now when you go to the authorities, they say that the site needs inspection. Earlier, MHRA would be honored by mainland Europe and mainland Europe authorities' inspection would be honored by MHRA. But now that's not the case since Brexit has happened. However, for one of our very large supplies, the inspection is slated to be either end of October or beginning of November. So we are on a very sound wicket as far as Europe is concerned. Coming to US, we have projected a figure of 300 crore plus for US. This is the short-term blip you are seeing, and I'm 100% sure that we will be meeting our year-end target. Because of dossier fees, sometimes things go up and down. but that will get steadied from the second quarter onwards.
Business, on the gross margins, essentially. So, have we taken the NLEM product portfolio price increases in April? And on the non-NLEM portfolio, have we started the process of taking price increase wherever due?
5 to 4%. That's for the scheduled category products. So long we were getting hardly any price rise for that. Now the government has sanctioned, but we cannot suddenly jump into it. Point number one. Second, non-NLEM products, we are allowed price rise, but however things are being watched, and after a running period of 12 months, we will be doing that.
So you may not suddenly see an impact quarter on a YOY basis.
And for the non-NLEM, because between your last price modification and the current modification, so I understand it happened over the year. For the non-NLEM portfolio, I think they've taken the entire 10, 11% increase that is allowed. So I'm just wondering why, because there is a cost pressure that needs to be passed on, at least if we are keen on maintaining margins.
NLEM portfolio is only 11%, you know that. Most of our product basket is acute subchronic, and here it's not as easy to just increase prices. So we'll do it in a staggered manner.
Okay, understood. Lastly, on the growth for the India business, so obviously, in the last call you mentioned there were about 40 to 50 crores of one-off sales in the last year, driven by COVID-related sales of ATM and Febrex, both excluding COVID-related products. So I'm just wondering, for the full year, excluding COVID, will we do mid-teen, high-teen growth for the full year?
Aditya, let me just take this opportunity to share some more details.
Sure.
As I said, if we just take the impact of Carvaan plus ATM out, the organization would have grown at close to 4%. And driving this growth are fundamentally strong brands. The entire ophthalmic portfolio is growing at 50%. Prescription-driven businesses, some very good triggers which give me great confidence that save these kind of blips, ups and downs that will be created because of base effect of last year. India business this year will do very well on a qualitative as well as quantitative basis.
That makes a lot of sense, Aditi ma'am. Thank you, and I'll get this before I get back into the queue. Just one more question on the Ebitda margin. The margins versus last year, because this quarter we have seen a decline in Ebitda margin.
Yeah, I think we had said very clearly that for the first half this year, it will take us at least half a year to.
The next question is from the line of Jainil Shah from JM Financial. Please go ahead.
Yeah, hi. Thank you for the opportunity. My first, how many products have we launched in the last 2 to 3 quarters, and how are they performing? And any
in the derma segment, the dental practitioner, Dropizil syrup, which is peripherally acting caution. We have also launched Subitral and Subitral DS, which is itraconazole with a micronized novel dosage form. I'm happy to share that in the first quarter this year, sales from the new launches of last year, which is 1.8% of our top line.
To focus on?
Yeah, so we are still consolidating in the chronic space. Most of our launches are going to be in acute and subchronic state, as well as GI, where we have big stakes. Yeah?
Launches that we can expect maybe in FY23 and FY24?
So definitely it's on a very big growth path. Made also a 5-year plan. We are mainly into now, the new pipeline is into complex injectables, into suspension ophthalmics, and into sustained release solids. So this is the idea going forward. And you will see a very good growth in US business.
What kind of size are we looking at, maybe say 3 years down the line, 4 years down the line, in terms of...
Current size, this year we would be around 305 to 310 crores. And the business would easily grow at 33 to 35% per year.
Okay, that's great. Yeah, that's all from my side. Thank you.
Thank you. Reminder to all the participants to press star and 1 to ask a question. The next question is from the line of Dhara Patwa from Smiths Limited. Please go ahead.
Yeah, hi. Ma'am, I just wanted to ask whether we have launched lacosamide in the US.
Tablets as well as lacosamide injections in the US market. And in fact, Indoco was the first company to launch lacosamide injections. For the market was 43 million when it was before it went generic. It's a bit too early. Maybe we are finishing 3 months in this at the end of August.
I think question was on the employee cost. Like this quarter it was 20.8 as compared to your historical levels around 18.
The increase in employee cost is a function of increments that have been given. So
Thank you. Before we take the next question, Ariman. The next question is from the line of Kunal Mehta from Vellum Capital Advisors. Please go ahead.
Thank you very much for the opportunity. Firstly, I would just like a clarification on the European side. So I think we were always very optimistic on the growth of this business. And so could you tell us, I mean, for this year, what are the targets you have set for the European business and barring this, this for our products?
Yeah. The environment is fine. There was, as I explained earlier, one very important product, which is a huge supply. We want to site transfer it to Baddi, where we have huge capacities and big batch sizes. So that is happening by November.
Got it, sir.
We will not hold that back. That apart, there is growth in every other product. But because this particular product seems so big, that's why you're seeing a flat number. But from second quarter onwards, things should improve, definitely.
Understood, sir. And also in the last quarter, I think we had announced certain, capacity expansion initiatives. I think there was one initiative which was announced in one line for high potency products meant for Europe. And also there was expansion of lines in injectables, I mean sterile products, also, as well as suspension products. So can you just give us a status on the initiatives right now? Are they now, being commissioned, and what sort of output do we have in terms of revenue from these capex activities?
Yeah, perfect. I think you got it right. The high potency department is just about to start functioning. We are about to start trial batches next week, and thereafter will be the scale up and validation batches. So that's online. The new line number 5, is coming into the plant by end of September. So that is also on track. It will take 2 months after that to get qualified and validated, which means by first week of December, we will start the trial batches on that line. And we are planning one more line after that, after line 5 settles down. So this is our capex program.
Sure. So can you give us more understanding on this high potency business which we're trying to cater to? From what source it is coming, and what is the nature of this contract, and other details if possible, something?
There are no contracts as such. These are products which are 0.25 milligram, 0.5 milligram per tablet, but very high potency. And the regulators are not comfortable that the company manufactures such products in general manufacturing area because of cleaning validation issues. So that's the reason we thought of this.
I can just add here that because these products cannot be made in multi-product facilities, there are very few sites which can make these products, and that is why it is a good business to look at.
So this is a business in addition to what you're doing right now. So it's not as if you are getting it manufactured from some other.
Yeah.
Okay, addition. Sure.
Additional, yes.
Sure. Just one last question. So when you say that you have a target of 300 crores for the US business this year, this amount is only, it is excluding any profit share, which I'm sure you're factoring in the regular dossier income, but any exception, I would say large quantum of profit share is something which is excluded from this, or is a part of this?
No. This is a normal total business, including everything.
Okay, so you are also including, let's say benzolamide profit share starts coming from, let's say.
Yes.
Okay. Okay, sir. Sure. Thank you very much.
Thank you. Anyone who wishes to ask a question may press star and one now. The next question is from the line of Rashmi Sancheti from Dolat Capital. Please go ahead.
Yeah, thanks for the opportunity. So on Europe business, basically just need a clarity that the growth was flattish because of the shipping delays and you were facing some issues in getting the repeat orders?
No, not repeat orders, Rashmi. It is, as Mr. Sandeep explained, there are certain orders from some geographies for which if we have to transfer site to another location so that capacity is freed, we have to wait for the regulator's approval, which is why things have gone a little slow.
So basically, what you are doing is like from Goa plant 1, you are planning to transfer that to the Baddi 3 unit. Is it correct?
Yeah.
And Goa 1, you want to dedicate it completely for the US business.
Correct.
But Goa plant 1, we don't have US FDA clearance, right?
We have US FDA clearance. We have a warning letter hanging, but the clearance is very much there, and current supplies are going on.
Okay, so on warning letter, what is the current update? Have you heard anything from the US FDA related to the inspection or anything?
No, nothing yet.
Okay. Ma'am, what is the reason for transferring, the site transfer from Goa to Baddi? Basically, everything to come under one group, that is what you're aiming to?
No, the idea is to segregate by geography. Because, when the regulators come down and the product mix, it is not advisable to mix up have too many products at one site. So the idea is that Goa 1 to 3 will be dedicated for US and the one will be entirely doing Europe.
Understood. And how much time it will take for this approval on the Baddi plant, and when do we expect a smooth supplies from Baddi to Europe?
Another quarter.
Okay. We should expect normalization of European sales from the second quarter onwards.
Third quarter onwards. By second quarter, approvals will come in.
Okay, then do you maintain your guidance on Europe of around 20%, which you gave last time?
Yes, we maintain.
Okay. And ma'am, on US business, what are the kind of launches or how many launches have we done in this quarter?
Launches, two launches we have planned in the current quarter.
And how many filings we have done in this quarter?
In this quarter, we are not. In the whole year, we plan to file 4 or 5.
Okay. And on US, basically we had installed a new new sterile plant, and that was about to get operational in June month. So what is the current status on that? Whether, is it operational, whether we have started supplying from that particular plant?
No. That was a replacement line. The trial batches have started just now. The new line, absolutely new line number 5 will come inside the plant in the month of end of September. And that will get qualified by end of November. And the trial batches on that new line will start in December.
Correct, as you mentioned. So this replacement line which you mentioned, this is also in Goa 2 or in Goa 3?
Goa 2, sterile plant.
Okay, and the new line which you are talking about is also in Goa 2, right?
Yes.
Okay. And what kind of filings or how many filings basically you are planning to do from this particular plant? Or is it that, we can expect the numbers only from FY24 onwards?
See, filings is a continuous process. As I said, if you take 5 filings per year, we don't want to give you details at this stage, whether it is off-style or injectable or solids. So it is considering the total business that we are talking about.
Okay. So then last time, I mean last quarter, you all mentioned that, in India business we will be taking or we have taken 6% price increase across the base portfolio, which includes 4 to 5% on non-NLEM and 10.72% on NLEM portfolio. So is it that, it has not taken yet and you were just saying that, you're planning to take it and now because of the competition you will take it in a phased manner?
Correct. That's correct.
Correct.
Okay. So, but even on non-NLEM, you won't be taking it. That also you will be evaluating the competition and then take it.
So I think that we will take. So that is
okay,
not a big number, no? Yeah.
Okay. So in first quarter and second quarter, as of now on NLEM portfolio, you have not taken any kind of price increase on any part of the portfolio yet.
Yeah, correct.
And still you maintain that, domestic business would show a growth of around, it would show a growth on a high base of FY22 in a mid-teen.
Yes, we maintain.
Okay. And on gross margins and on EBITDA margin side, when you say that, we would see a improvement from the second quarter, can we expect that from the current levels, the gross margin should at least improve by 100 basis points in FY for the full year?
Yeah, of course.
Definitely.
Okay. And you maintain that your EBITDA margin would be in the range of 19-20% for FY23?
Yeah, we've said that earlier also.
Okay. As of now, we are not seeing any risk the cost for the freight cost or the raw material cost going up. We are basically seeing a softening month on month, or we are still seeing some challenges on that?
In fact, we are seeing things softening down in the last, 3-4 weeks.
Okay. That's it, sir. Thank you so much, and that's it from my side.
Thank you.
Thank you. The next question is from the line of Kunal Mehta from Vallum Capital Advisors. Please go ahead.
Thank you, Ms. for the opportunity again. Sir, ma'am, I just want to understand what is the reason behind, delaying this or probably deferring this price rise in India, because when we study the IPM data, even the data of our, our underlying therapies or our underlying molecules and salts, a lot of the players actually have taken market share, and even across acute players, there has been good price increases of at least, high single digit, of course not entire 10%, but at least good high single digit. So, could you please help us understand what is the reasoning behind, deferring this price increase in a non-NLEM portfolio?
If you speak of IPM in particular, see, you have to understand one thing. We have several products which feature in the top 5 in their own therapy segments. But possibly when it comes to anti-infectives, where Alkem is a very large player, they probably have a brand in a position where they can take that price rise and be comfortable with it. I'm not saying we are not going to do it. We've just not taken it all in the first quarter.
Sure. Sure. And since now we are in, August, 9 days have passed, and we've only seen July. So could you give us an outlook of how the season, acute season, anti-infective season for the next this quarter and the next is expected to shape up? Any early indications that you read from the data which you have on hand?
So we've already closed July, but I'm sorry I'm not free to discuss that. But it's very clear that at least when you look at the rains, every time it rains in Indoco, there is a celebration because obviously with respiratory and anti-infectives both contributing close to 40% of the top line, it is very clear that sales will pick up for both these products. But we are also seeing other segments, as I said earlier, which are not necessarily linked to season doing exceedingly well. If you look at our prescription growth and our climbing of ranks on the prescription basis, there is great positive, and possibly some data which is already in public domain I can share with you. For the month of July, we have jumped 1 rank in IPM and are now 26. We have overtaken Ajanta both in growth as well as units sold as well as price, etc.
Sure.
So and for good for India. Yeah.
Sure. And for the month of July, YOY, have you seen prescription growth?
Yes. YOY, MAT, YTD, across all doctor specialties, across all products. Even where it's the primary fluctuation you will see this year, because there was a lot of over-the-counter last year in some areas. But prescriptions are very much there. Even for ATM and Carvol Plus, our prescription levels are better than many other competitors.
Sure, ma'am. Sure. Thank you very much for the data points. Thank you.
Thank you. The next question is from the line of Aditya Khemka from InCred Asset Management. Please go ahead.
Yeah. Check with you on the softening of real.
Mr. Khemka, we are not able to hear you. Sir, your voice is breaking.
Am I audible now?
We are hearing you in phases. I mean, not very clear, Aditya.
Breaking.
Okay, I really don't know what the problem is, but I'll try to put my question and let you know.
Now you're clear. Yes.
Now you're okay.
Okay, great. So my question was on the softening of prices. We have heard similar commentary from other pharma companies as well, where the prices have sort of come off from the peak, even if not normalized to pre-COVID levels. I just wanted to understand how much inventory of raw material do we generally carry, and I'm sure because of driven by COVID, we would have carried higher than normal inventory. So how much time would it take for us to go from high-priced inventory consumption to lower-priced inventory consumption?
We generally carry, because of COVID, we had to build up inventory. We generally these days carry 2 months inventory.
2 months inventory.
Yeah.
And that's including raw material and packing materials, Sandeep sir?
Yes.
Okay. And secondly, on the IMS data, I think you guys present secondary audit data on your presentation. The source is IMS or is it AIOCD?
AWACS secondary data or prescription. Which one did you want to know?
The brand data for the Indian business you put on the presentation deck, right?
Generally, the primary, secondary, whatever we call it, which you get from the agency, that is AWACS. I'm sure they have written it. If not, we will add it. The prescription data, if anywhere quoted, would be IQVI.
All right, understood. So what I noticed in that data was that some of your new launches are also doing phenomenally well. And as you said, ophthalmics and some of the newer products. So could you talk about, the chronic portfolio built out? And ma'am, internally, do you evaluate your performance, the India business performance in the acute, subchronic, chronic bucket, or do you make 2 buckets, acute and subchronic together, chronic separately? And what is sort of your MR productivity in individual buckets, and what is the upside in that MR productivity is what I wanted to understand.
Yeah, so I will not be able to give you right now MR productivity by product basket or bucket, because these products, although we call them acute, subchronic and chronic, they are actually spread across all our divisions. Except for Synergy, which is the division formed from C&D and Focus, which is a pure chronic division. Almost all other divisions carry all 3 baskets. But let me give you some more details of how these categories have performed for us. So in the first quarter this year, acute actually degrew by 24% because of respiratory and anti-infectives, as we have discussed. But the subchronic basket has grown by 17% and chronic by 5%. And on immediate preceding quarter basis, acute is flat, subchronic has grown by more than 19% and chronic by 10%. So this is how they fare. Average PHY based on people on payroll is around 3.7.
Got it. But ma'am, I know it's very difficult to break into chronic given the intense competition and the intense marketing power of the incumbents. But on a very small base, the 5% growth in chronic seems, lower than what the market is doing. Is there something?
Let me explain, Aditya. I'm sorry. You want to complete your question?
Yeah, the question was, does something need to change for our strategy? Or
Yeah. So what we have done, Aditya, is if you remember, we had two divisions in chronic. One was CND, which was focused on the cardiologist, and the second was focus, which was on endocrine and consultant physicians. And since we were not able to make too much headway with two divisions, we consciously decided last year, in the last quarter, that we would create a new division synergy from these two divisions. So what we have done now is that we have established a good specialty brand matrix in synergy. And there are products like Aloja, which is our aloliptin, and Tell Me Check, which is a Tell Me Sartan, which are the growth drivers. And other products like Glycheck, which is glycoside, Pricheck, which is glimepiride, and Calade, we are consolidating. So we have done away with the tail. There was really no point, as you also said, being 40th in a particular category and things like that. So from around 290 people in both these divisions, we are now at around 170 with one division and consolidating. So I feel this will be qualitatively a much better business, and we'll be able to, develop good brands.
So I got it. You rationalized a few products at March, so your original shrunk and then you have grown on the possible. Is that the message?
Your voice is really cracking. Can you repeat that?
It's okay, ma'am. It's okay. I'm saying that you have rationalized a few products and a few MRs, so your base would have shrunk on the chronic side, and then you have hired. Yes. And then you have grown on that base. That's how we should read it, right?
Yes, absolutely. Yeah.
Got it. And last question, ma'am, on the India business again. So when you look at the environment where you have online pharmacies, you have Amazon entering into, let's say, drug delivery in other markets, not in our market yet, hopefully, and you have some of these generic announcements being made, margin caps being made. At Indoco, what are the vulnerabilities that you have to any of these or all of these sort of changes happening in the broader market?
Yeah. So, Aditya, possibly what is not a very great strength at Indoco becomes a huge strength when it comes to dealing with all these supply chain kind of disruptions that are happening. That is, if you have legacy products with good prescription support and a very good demand attached to them, there is very little that happens by way of discount expectation because the demand is there. Okay. So we feel pretty comfortable because as of now, at least, the e-pharmacies and all the others have been picking up products from our own stockists. So we are not doing anything separately with them because the demand of product is there. In fact, even on Amazon, one of our products featured, but it was put by somebody else, so we asked them to withdraw it. So these kind of things happen, and when it comes to generic and others, as we are seeing this having more traction in the chronic space. So erstwhile products, brands over 50 crore, very well developed with good prescription support, they are comparatively less impacted by this. And also we do not have very high price products. So the generic price advantage which the customer should get, it doesn't feature much. Yeah. So compared to some other companies, Indoco is in a much better place. But yes, this is an evolving kind of landscape, and we are aware and watching it.
I understand. Thank you, ma'am. Sandeep sir, on the export side, you mentioned freight costs as well as one of the issues in terms of being able to supply to European countries. Again, some of these indexes like the Baltic Dry Index, etc., that we track, they are showing some cooling off in freight rates and higher availability of containers. Is that something you have noticed around as well?
Yeah. See, the problem started because of non-availability of containers. Simple economics, you know better than me. When there's a shortage, the prices shoot up, and that's what happened. Yeah. So manufacturing of containers was taken up on a war footing globally, and today the situation is eased quite a lot, and as a result of which the prices of the rates of freight have come down.
Right. So, my question was that from the second quarter onwards, which is, I mean from July onwards, have you seen no lag in manufacturing and dispatch, or is there still a significant lag between manufacturing and dispatch?
No. The lag is very, very short. The moment the batches are ready, they are lifted off, go to the seaport and shipped immediately.
I get that. And in the API bucket, Aditi ma'am, I think, Portanga, we expanded capacity, and I think we talked about it. How do we see our external API? I understand we are consuming more and more internally, but how do we see our external API growing?
Again, I couldn't hear you very clearly, but I think I get a gist of what you're asking. So as you rightly said, our internal consumption is going up, but we are also now able to, last year we suffered from this specific issue where our internal customer satisfaction and external customer deliverables clashed for time. So some of our capacity had gone wasted. This year there is very good planning, and I expect we will do much better. We have orders. We have orders both from internal as well as external customer, and we are working towards it. So I feel this year we expect good growth in API business.
I understand. Thank you and all the best.
Thanks.
Thank you. The next question is from the line of Cinderella Carvalho from JM Financial Limited. Please go ahead.
Thanks for the opportunity. Ma'am, I just wanted to understand from you, how should we understand our injectable portfolio strategy ex-US? What is the thought process over there? Apart from the US market, do you have any plans which you could share with us right now?
So currently the injectable business, we are concentrating only on US. It's because in India, if you want to go into injectables, you must have a front end in the critical care where we do not have one. So it will be an entirely new business thing we'll have to look at. Within US, there are many injectables which are in shortage. If you check FDA sites on any particular day, you see that. That's because not only are injectables very much needed and demand increases day by day, but they are difficult to make, and several plants have had challenges on sterility and other fronts. So it becomes a good niche segment to be in, because if you are able to deliver product well, then you can garner good market share. In the injectable space, for Indoco, we are getting into difficult to do and complex injectables. So that we do not want to get into commoditized kind of segment. I hope that answers your question.
I think it does. Ma'am, if we have to understand what is the kind of capacity utilization for our US FDA approved plants as of now, if you could share any rough indication around that.
Right now, I think plant 2, which is a sterile plant, we have about 67% to 70% capacity utilization. Plant 1, we have plenty of capacity. We are supplying only one product to the US. And plant 3, our capacity is occupied right now because of European products, which we are going to transfer to Baddi. And once that happens, that plant will be totally free to manufacture US products.
Thank you so much. That's it from my end.
Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Yeah, I'm really thankful to the participants for a very, very active call. Wish you all safe and healthy period ahead. All the best wishes to you and your family. Thank you very much.
Thank you. On behalf of JM Financial, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.